Good evening everyone and welcome to Admiral Markets webinar today, how to turn scalp into intraday positions. My name is Nenad and I will show you how to switch from scalp into scalp swing and into intraday positions. I will give you a few cues which you can use for your trading, and of course you can, if you are interested in those indicators which I will be showing today. Some of those indicators will be available after our candlestick webinar. So first premium webinar is candlestick pattern recognizer, and after candlestick CPR webinar I will probably schedule a webinar where I will be explaining hourly pivot point and daily pivot point indicator, which is excellent to use. So in these examples I will also use those two indicators which I use also for my trading. So of course, first of all, our standard risk disclaimer. It seems that I didn't include the risk disclaimer, but the standard risk disclaimer stating all the possible risks associated with Forex market, and by agreeing with it, you're proceeding further with me. I will put this in a future webinar. I'm sorry I forgot it, but we can continue with our webinar. So what is scalping? What are scalp swings? Knowing when to scalp. Then what is intraday trading, intraday time frames, and turning scalp into intraday positions. So the primary goal is to make scalps into scalp swings and scalp swings into intraday positions. Scalping, you probably all know what scalping is. It is the quickest way of trading. It is really the quickest way of trading. There isn't a quicker way to trade than to scalp. Then let's say that scalping requires momentum and volatility. Then it uses small stops, and it's done on lower time frames, M1, M5, and M15. So that is basically what scalping is. Now, in scalping, targets are lowered accordingly because, let's be honest, if you scalp, you cannot expect 30 pip, right? At least 5 to 10 pip. That is, not at least 5 pips to 10, 12 pips. That is how we scalp. So it's very, very uncommon for any trader, serious trader, who thinks that he can make 30, 40 pips with scalping. Yeah, it can be done, but it can be done only with multiple positions, because scalping systems and scalping methods are not designated to make 30 pip in one trade. But there is a little trick which we traders do, at least I do. I don't know if other traders do, at least I do it. There is a little trick that can basically give you scalping into scalp swings. So basically it can turn a scalping position which basically made let's say 10 pip into a scalp swing which can make, and possibly can make, let's say 20 pips. So targets are lowered in scalping. Breakouts are part of scalping methods. There are two ways to trade breakouts. You probably know that. There are breakout pullback continuation patterns. You know that. Let me draw you. You know that. What is that? Breakout, pullback, continuation, or standard breakout retest. In the first example, in the breakouts, you trade here. In the second example, you open your trade here at the first retest. And there are standard trigger happy trades. Basically, at the first breakout, after 1 or 2 pips, you initiate the trade. And now usually breakouts are one of scalping strategies. So scalping is, as it name says, it's scalping. We take only small amount from the market. But breakouts are also one of scalping strategies, because mostly breakouts concentrate on taking 10, 15 pips, or if you do trigger happy breakout, then you usually will make anywhere from 5 to 10 pips. Now, some time ago, you probably know that some brokers prohibited scalping. Today, that is not the case, and of course, such brokers are usually bucket shops. Scalping can be dangerous, but also profitable. Now, as we said, scalping is the quickest way of trading. It exploits sharp movements. It uses leverage. You know that if you make a scalping trade, you will use a leverage. But in today's webinar, that can be a nice trick to overcome the possible dangers of low targets. I will show you some tricks how you can switch from 5 to 10 pip into possible 30 pip position. It's not, how can I say, I have not invented a warm water, but that is what I do. No one has taught me that. That is my own method how I do it if I scalp. So why not? And you will see that it is logical. It uses small stops. It is done on lower time frames, M1, M5, M15. Then targets are lowered accordingly to those time frames. Breakouts, as we said, are scalping strategies, and it is profitable. Now, how forex scalpers make money? First, we need to say patience. You need to know that scalping is not, because this webinar is about turning scalp positions into intraday positions. So first we need to start with scalping, because if you open a trade in this manner, you will open a scalping position. You will not open intraday position, because intraday positions can be turned into scalps easily. If you open a position, let's say your target price is 80 pips, and if you close it after 10 or 15 pips, that is basically you turn your intraday position into a scalp. But today's webinar is scalp into intraday. So the first thing, you will open your position with a scalping system or scalping method. On Camarilla MACD, I have a 5-minute template. That 5-minute template is basically Camarilla MACD scalping method. And Camarilla MACD scalping method uses those postulates we are talking today. Now, patience. You must not scalp, and you should not scalp when there is big news coming in. Today is a good example. You saw what happened with cable. It dropped almost 100 pips after the news. And you see what Euro did. Euro was very bad to trade today. Only 30 pip of ATR. And basically it ranged from 37.0002 to 37.20. Now, if you paid attention to our last session recap, you could have made more than 200 pips. There wasn't a single losing trade out of all those setups I mentioned today. Euro buy around 37.80. Basically, we could start it as a scalping position, but eventually it came for 40 pips of profit. Cable also. Breakout of the neckline of the head and shoulders. All of those setups were perfect for trade. Now, I know that most of you want to scalp and close your position once it's in a profit, and you probably use a lot of leverage. But stops, if you scalp, should remain the same. but your targets should be trailed. So momentum is strong, your trade will be possibly stronger. Sharp price movements reflect on your charts as huge volatility candles that can be scalped. Counter trend scalps are also common. Let's see a possible, I don't know which pair I can, let's say that Aussie was doing very good today. It went to 94.10 something. Basically that was the top. And if you know what the top is and you spot a divergence, you can basically make a counter trend scalp position. And that counter trend scalp position can be turned later into an intraday position or scalp swing. As I said, breakouts are standard way to make money on price movements. Either breakout, pullback continuation, or breakout of daily highs or daily lows as trigger happy trades. But beware, if you use trigger happy trades, probably you would use it with a slightly bigger leverage, and you will close it very, very soon after the trade has been initiated. I have already explained that trigger happy trades are those trades. Let's say that this is resistance and the price is going to that resistance. Once that resistance is broken, you immediately open your trade. You don't wait for breakout pullback, breakout retest, or breakout retest continuation. You basically initiate a trade once that resistance is broken, and usually 80% of the time 5 to 10 pips are very sure, because the price will collect some stops and then it will possibly turn down. And those volatility trades, momentum trades, or stop grabbing trades are exploited very frequently on each of those pairs. But you see, 5 to 10 pips usually trigger happy trades. But also those trades can be turned into scalp swings. Let's make it 15 instead of 5. Or if we make scalp swing, why not make 50 instead of 15? Why? We can try. We don't know if we will, but we can secure 15 pips for a possible 50 pips. It's better than nothing. And leverage. The final material for building successful positions is leverage. You know, if you go for 100, 200, 300, 400 and more pips, you don't need the leverage. But if you make 5 to 10 pips out of the trade, or 30 pips out of the trade, or 50 pips, you need to use some leverage. You know how I do. I don't say that leverage should be huge, big. But the thing is, that leverage can work in your advantage. And the leverage should work in your advantage. Because if you use 0.9 or 1% of a risk, even if you lose 3%, that is very, very easy to recuperate for that. You can make it. But if you use, no, the stupidest thing I have encountered so far is that many of those systems tell you use 3% of the trade. So let's say that you have $10,000 account and you use 3%. Your stop loss is 30 pips. You trade with one lot. So you will lose $300 in a single trade. That is a stupid thing. Leverage is important in scalping, but leverage should not be very, very big. even though if you make 5 to 10, 15, 20 pips, lower your leverage. I know that most of us probably many times did those trigger happy trades at the break of daily highs and daily lows. That way it can be done, but only if ATR is suggesting that it's below 80% of average 7 days ATR. If your ATR is 100% or more, or 80% or more, then daily highs and daily low breakouts are not to be done. Now, low momentum also can be good for scalping. You probably know that many times low momentum can be good for 3 to 10 pips. Let's say 3, 4, 5 pips and you're done. More than that is not advisable because on a low momentum, price cannot move and you cannot basically make the money. So the thing is, low momentum can be good for scalping, but not all the scalps could be done with low momentum. It depends from method to method. Range, some traders use those ranges. You know, you make a range and then you use it. Now, I'm not a range trader, but ranging days can also be good for scalps. Today, those who trade ranges could have made money scalping euro around these points. I cannot make the money that way because my methods are not range-bound methods. I wait for either a trend or counter trend. Ranging is not my specialty, and I don't teach traders to trade at ranges. I know how it can be done, but I don't do it on my live account, nor I'm a good person to explain how to do range trading, because you know, I trade intraday, and most of my trades, you probably know, are intraday positions. So if I was a range trader, I would probably pick another pair to trade where I spot the trend. So 100% or 90% of my session recaps and my analysis daily, which I publish on Admiral Markets blog and Forex Factory and worldwide investor forums, are basically trend trades. Or it can be counter trend trade if I say, okay, divergence is there, try to enter there because it's a counter trend position. I make money that way. So when I see that ranges coming in, well, I won't scalp, I won't trade, I will even close my position in a loss, but I won't do any range bound trades. I don't like to do it. Euro might jump even more, but you know, today it was all day 37.00, 37.20. Why would I try to long 3 times around 37.10 when price drops and dropped 4 times below 37.10? I just am not comfortable with that kind of trading. But some people do that. Now, those who do range bound trading can tell you, okay, I can make money or I cannot make money. The biggest thing is, what if trend starts? You can make money there, you can make money here, you can make money there, but you know, you don't know when the trend will start. Next time you will be swiped out. Next time you will be swiped out. What if range widens? Let's say that you have met this range and now it's still in the range, but the range on intraday time frames. I'm not talking about 4-hour trades. I'm talking about intraday time frames. what on intraday time frame price goes 5 pip, making above the last resistance, above last daily high, making a new high, and then immediately goes 5 pip, breaking daily low, making a new daily low, and then again range. You know what sort of trading is that, and you know what pattern is that. Megaphone or broadening top. The worst nightmare. This is out for me. I don't do it. I don't trade. I'm just, if I spot this, well, I wouldn't trade it. That is why I say knowing when to scalp. It's not just about having a good method or having a good system. You need to use your mind, your knowledge, your common sense. That is why I prefer London and New York session. London and New York session are very good for exploiting scalp movements and making scalp trades. Because most of the time in London session and New York session, the price will go in your favor. First 3 hours of each session are most profitable ones. Because in the first 3 hours, traders will position themselves. Traders will pull the money out of the market by closing their position, and it will do additional volatility to the market. And the first 3 hours are basically when most of the traders are very active. Australian session is not active session. Asian session is usually active around 3 a.m. GMT +2. It's Central European time zone. And usually volatility strikes, kicks at around 3 a.m. That is the time when we usually sleep, right? So basically, it doesn't matter if those 3 first hours are retracement. If you spot a good trade, let's say that basically today you saw Aussie yen. It went to 96.10 in Asia session. But immediately after the London session started, it dropped to 96.60 and even lower, 95.60, sorry. So basically first 3 hours of a session can be used for trend trading and for counter trend trading. So let's say that today around London session euro was at 36.80, just for example. What would you do if you saw that euro is around 36.80? You would possibly make a long position out there, trying to exploit the possible retracement. And then after that retracement has been done, your chart possibly would signal another trend trade. So you need to know when to open a position, which time to open a position, and which pair to trade. Good scalping setups are usually found 10 minutes prior and 10 minutes after TOTH. TOTH stands for top of the hour, because most traders close and open their positions 10 minutes prior and 10 minutes after TOTH. That is the simple truth, and that is how those traders trade. So they open trades usually 10 minutes prior and 10 minutes after TOTH, either open or either close their position. Now you know that each close of buy a long position is automatic sell into the market. So when traders are closing their long position, it gives you momentum for short trades. Okay? And vice versa, of course. So first 3 hours of each session are suitable. We don't scalp on NFP days, bank holidays, stress test, and 15 minutes prior to and 15 minutes after the strong news data releases. There are many good traders who trade alongside they don't trade with me, but we exchange our opinions also on Forex Factory on my thread called Spider's Den. And many traders from time to time make that same mistake again. They want to trade 10, 15 minutes or let's say 30 minutes prior to big news. They're trying to make some scalps. I advise don't do it. Cable news for GBP are very volatile. Even though if you make a good technically valid position, there is a possibility that you will lose just because news came in different than your position. And that is why I advise scalping only 15 minutes 15 minutes after the strong news data release. 1 hour prior, or let's say 45 minutes, is okay. Some news can be scalped prior to and 15 minutes, or let's say 5 minutes after the release. But the red news, such as today's GBP news or Zeus sentiment on euro dollar, you shouldn't trade. If you make intraday position, don't make it only after the news has been released. So knowing when to scalp is of utmost importance to any trader. Now, what scalping is, and let's talk about turning scalps into intraday positions into scalp swings. 5 to 10 pips is usually scalping method. If you know what I mean, even though my Camarilla is based on Camarilla 5 minute is based on scalping, Camarilla 1 hour is based on intraday positioning and counter trend, and 1 hour and sometimes 30 minutes is used for breakouts. So basically 5 to 10 pips is, if we scalp, we take 5 to 10 pips. Most of scalping systems will give you 5 to 10 pips if you make a position. And you will lose probably more. If you lose, you will lose 15 or 20. But 5 to 10 pips is something you should be aiming. It uses hourly pivot points, at least how I do it. It uses hourly pivot points or fixed target. I personally take those hourly pivot points when I scalp. Usual stop for scalping trades is 10 to 15 pips. If you make it below 10 pips, most of the times your trades will probably end up with 2 or 3 pips of a profit or with a loss. There is also high frequency trading, HVT, which stands for opening very much, let's say opening a huge number of positions during one session or during 1 hour. High frequency trading is prohibited by most brokerages because some robots can make an enormous amount of money using high frequency trading. But scalping is also a way of not high frequency trading, but frequent trading. Because you know, possibly if you make 1 minute scalps, you will be making many entries during the day. Now, stops for scalpings, this is what I should change. Stop for scalps are usually, this is not true, 10 to pip stop. So 10 to pip stop, this is meant for scalp swings. So 10 to 15 pip stop is used for scalping stop loss, and 5 to 10 pips for a possible target. Risk is bigger because you will open a trade using slightly bigger leverage. That is scalping. Scalp swings, bigger scalps. So we are talking about bigger target prices. I use hourly pivot points, it depends. Sometimes they range for 10 to 20 pip of target price. I call it scalp swings. That is my method and proprietary name, scalp swings, because basically they're a form of scalping, but with bigger targets and slightly bigger stops. Usually those stops range from 15 to 20 pip, and targets usually are 10 to 20 pip. But that all can change. I will show you how that can change. Those are scalp swings. And we can use a lower leverage because we have a slightly bigger stop than scalping. And intraday trading. Intraday positioning during the day. Usually we use top of the hour trading, 1 hour or 4 hour, or if we want to exploit 15-minute entries, we use it with basically MTF, multiple time frame trading. So we spot the trend on 1 hour and we use 15-minute entries. Most intraday methods use 15-minute entries. Stops are also higher. Stops are 30 to 50 pips. And daily pivot point targets and previous swing low highs are targets for determining where we take profit at. Now, let's go to examples. These are the indicators which I will be making, probably I will be making for this a webinar, premium webinar for these indicators after this CPR. It's hourly pivot point indicator and daily pivot point indicator. It helps me a lot to determine those hourly targets. If I scalp, I use hourly pivot points. So let's say this is my position. This is where I opened a position based on my method. And I want to take profit at the first resistance. Because I opened my trade here, I want to take those 10 pips, which is also in a perfect confluence with hourly pivot points there. Most of us will place our stops below the last low or below the last support. This is support, 1 hour support. So I will place my initial stop few pips below the support. Now, after I make 10 pips, I have two options. If I want to make scalp into scalp swing, I will move my stop to break even. Now, guys, pay attention. This is how to make scalp into scalp swings. And this is, again, one of crucial things why you should trade multiple pairs. Because if you do this, many times you will be stopped out at break even. Now imagine that you are making 80%, 70% of the time break-even trades on euro dollar. That is also one of the reasons why you should trade 20 pairs. if you use turning scalp swings into intraday positions. Now, this is my entry, this is my target. Once the price hit my target, let's say that the price basically hit my target there, because this is the line for this hour, and this is the target. This is where I made 10 pips. Now, I won't close my trade. I would move my stop to break even. Now, the initial stop, sorry, this is here again. Now, I will move my initial stop here. So after I make 10 pips there, I will move my stop here. And that is, maybe I won't be in a profit. Maybe I will lose that 10 pips. But I have a chance to make more pips from a scalp trade. So the first thing is, after the price has hit hourly pivot resistance, because I go long, I will move my stop to break even. Now, I may be wrong, but at least I won't lose. Now, after the resistance is reached, we don't close our orders. So basically, first thing we did, we moved our stop to break even, right? At resistance 1, and the break even is there. But if the price continues to go up, as in this case, it will hit R2. Now, when R2 has been reached, we can, and you see in this example it was broken. Immediately after it was broken, I move my stop to R2. So the first thing is, the price goes above R1, okay, R1. I can either wait and leave my stop at break even, or I can put my stop to R1. But if I see that momentum is strong and that the price will eventually hit R2, I can leave my trade on break even. After it hits R2, I will be moving my stop loss. Usually it will break for 1 or 2 pips. And that is why when I manually move my stop to R2. And this is today's example on euro dollar. You see, the price basically went above R2, few pips, and we could move our stop to R2, and we would secure 80 pips. So that means that we would, we secure 18 pips of a profit. So if the price continued up, we would be making our stop after the price is broken through R3. That is how we turn scalp into scalp swings. But you know, it's not an easy thing. First, there is psychology, because usually after you make 10 pips, you would close your trade, especially if the trade is leveraged, right? Now, that is why human mind, that no robot can do that. Human mind is what ultimately matters. Why? Because there is no simulation. No robot can do that. You need to determine whether the momentum is strong and the price will indeed hit this level, or the time is for you to close for 10 pips of profit. You know, better is to make 10 pips than stop loss. So when the price moves to R1, you can move your stop to break even, effectively securing your trade from a potential loss. But when price hits R2 and breaks it for 2 or 3 points, you move your stop to R2. Why we don't move our stops to R1 once the price reaches and breaks for 2 or 3 pips R1, because price will usually, like in this example, it will go 2, 3, 4 pips and then hit the same thing. You would 90% of the time you would be making that 10 pips. So that is why you need to wait. After the price has hit this level, move your stop loss to break even. After the price has made to R2 and broke it for 2 or 3 points, then is the time to move your stop loss to R2. Most of the time, you will be securing those number of pips and R2 will be hitting your stop for some 10, or let's say 12 to 20 pips of a profit. But you never know. Sometimes the price will go once in a while. It will go up. And then you do the same thing. And you do that on each pair you're trading, not just euro dollar, guys. Could we use, instead of hourly pivot points, could we use ATR stop pro indicator? Yes, you can use ATR stop. But in the premium webinar, possibly after this one, after CPR, I will be making a webinar about hourly pivots, daily pivot, and how you can make confluence with daily, hourly, and ATR stops. So for starters, you can use ATR stop. Good question, Miodrag, and yes, instead of hourly pivot points, you can use it. But ATR stops, have in mind, are meant for intraday trading, not for hourly trading. More suitable for intraday trading is ATR. So ATR stop indicator is more suitable for intraday trading. But hourly pivot point indicator is more suitable for scalping. Why? Because each hour these prices will change. At the time when I was making the webinar, you see 37.24 was signaled by the indicator, but even before the price reached that level, and it was perfect to the pip. Now that indicator shows completely different numbers, because the time on hourly pivot points has changed. The price has changed on hourly time frame. So hourly pivot points are better for scalping. ATR is better for intraday. So you should wait for a sign in for that webinar, possible webinar I will be making after this next premium, and I will be giving hourly pivot points indicator and daily pivot points. So hourly pivot points are perfect for scalping. So after resistance is reached, you don't close your order, you move stop to break even. After the second resistance has been reached and broken by 2 pips, you should move your stop to R2. So instead of making 10 pips, turning scalp into a scalp swing, I made 18 pips. It's double, almost double. It's not that bad because the stop was lower because I started from a scalp. My stop was lower and my leverage was higher. That is double the merit. You have basically 2 good things to happen: lower stop and high leverage. So basically we got 18 pips total instead of 10 pips. That is how we turned a scalp trade into a scalp swing trade. Now, scalp into scalp swings require hourly pivot points or any other hourly indicator. The good thing is hourly pivot points is the best indicator I know so far for scalping the market. Knowing only R1, R2, R3 for that particular hour. Because you're scalping, you use 5-minute time frame. You need to know hourly pivot points, not daily pivot points. Because you cannot do this on daily pivot point indicator. But scalp swings into intraday positioning can be done on daily pivot point indicator. We will see that on next slide. It can be done by the last swing highs and lows, but it's harder if you don't own hourly indicator. Those are called momentum trades. We are using the momentum. Now, scalp swings into intraday positions. If you do scalp swings, not just scalps, let's say that you start from a scalp swing, you can turn that into intraday position, and usually it's done on 15-minute time frame if they are not originating from scalp positions. Now we are talking about scalp swings into intraday, but eventually you can make scalp into scalp swing into intraday. But now we start with scalp swing into intraday. Scalp swings are usually trend trades. Counter trend scalp swings are also common, but only after divergence. I use divergence for counter trend trades. For trend, they require 1 hour trend and daily pivot point indicator. First, you need to establish a general trend. So you need to open 1 hour time frame if you're trading on 15 minutes, and you need to spot zigzag pattern. This is zigzag. On 1 hour, thrust, pull back, thrust, pull back, thrust, pull back, thrust, pull back. This is zigzag. So you need to open 1 hour, spot a zigzag. And then you should open 15-minute time frame, mark the swing from the topmost point to the lowest point because we are doing a short trade, and you should pick up your level for entry. Let's say that we have picked up this level because of double top and because of this, and we open and it's 50 Fibonacci level. So we made an entry on M15. So using general trend, we open 15-minute time frame, draw Fibonacci and enter somewhere around there. We need to use daily pivot points because we are using intraday time frame, 1 hour, not scalping time frame. And now, this is our entry, and our target possibly should be this or eventually this low, because you know this low might be keeping this pair from going further down. So the first target should be this. But this is entry on M15, so it's a bigger scalp. It's a scalp swing. Now, how we turn scalp swing into intraday? When 15-minute low is broken, this is the low, this is the price. Once the price breaks through this 15-minute low, 2 points, we move our stop loss here to entry position at break even. So the stop loss is at break even after the price has broken 15-minute low in this example. It's all the same for long trades except you go for 15-minute, of course, resistance high. So once this low is broken, you move your stop to M15. And this is daily pivot point. When first target is hit and broken by 2 pips, this is the first target, because you didn't take your position out, you still wait. It's a psychological thing, I know, but you need to be prepared for that. When S1 is hit, first target, and broken by 2 pips, you either make your profit, because you know this is scalp swing, but it's still an intraday position, because it's good for some 30 pips, right? 37, let's say 25, and this is 36.70. It can be called intraday because it's almost 50 pip. But when first target is hit and broken by 2 pips, you should either close it or move stop loss to S1. Sorry guys, I think it was some connection problem. So let me repeat it again. When first target is hit, S1, and broken by 2 pips, you either close your order or move stop loss to this point. So eventually you can hope for a bigger movement to the downside. Now this is scalp swing entry, because you possibly would try to take out your position around this level. And it's around 20 pips. But if you don't want to take 20 pips, if you want to make it, because the trend is strong, if you want to make it intraday position, then only when low is broken, previous low is broken, only then you move your stop loss to break even and hope that the price will reach this level. Once the price reaches this level and breaks it for 2 points, you either close your trade, but it doesn't do any wrong if you basically just move your stop loss to S1. And this is how we do it. And by effectively doing it, you should have daily pivot point and hourly pivot point indicator. I don't know. There are possibly 2 other indicators to do that. I use Camarilla. Camarilla is also good for turning scalp swings into intraday. But Camarilla is not good for scalp into scalp swings. You need, for that you need hourly pivot point. So basically this is how we do it. So watch 1 hour trend pattern. This is the first step. Zigzag, as you know what zigzag is, that is the basic and the most secure trend chart pattern, zigzag. Scalp swing turns to intraday only if the high-low is broken. Then trail the stop by daily pivot points or any other reliable pivot point indicator. When S1, R1 is broken by 2 or 5 pips, move stop loss to S1, R1 and target price to S2, R2. ATR indicator can be a great help for starters. Now, for those people, all of you who want to sign in, this is next premium webinar, Candlestick Pattern Recognizer. I will be giving you a Candlestick Pattern Recognizer. It scans for 48 different patterns. I will explain how you can do it. And after this preview webinar, possibly on next month, pay attention to that, I will be scheduling a webinar about hourly pivot points and daily pivot points, where I will be giving you indicator and explaining how it works. Now, scalp into scalp swings can work from time to time. Scalp swings into intraday work more frequent. Do that, experiment with trailing stop. And use ADR indicator for spotting the confluence of daily pivot point and ATR points. That is what I will be explaining also on that particular webinar. Now, if anything is not clear to you, you can ask me. But this is how I usually do my stuff. Please tell us what is stress test and how do we know that particular day will be a stress test. You can open Forex Factory calendar or use Admiral Market Calendar. I know it can be found on the site. Usually I use Forex Factory calendar, and stress test is so important that basically all of those sites will show you that. But don't worry, just follow my analysis on Admiral Markets blog and Forex Factory, and I will tell you when stress test is. So don't be stressed. I will tell you. I will make an announcement for that day if there is a stress test and that you should not trade it. Particularly, it's not very, very often, so you don't worry about it. If it happens, I will be first to tell you about it. And just use basically Forex Factory and Admiral Markets Calendar. So this is, guys, how I do it. If I make scalp position, it can be just better. If I don't want to make 10 pips, I can move my stop loss to break even and wait for the price to touch this level. And only that I will be moving my stop loss to R2. That is how I usually turn scalp into scalp swings. And when I do scalps into intraday trades, I usually use Camarilla, but daily pivot points can also be great. And of course, moving and trailing my stop once the previous low, when I go short, is broken. Because break of the previous low is the sign that the price will continue to go down. And that happened with Aussie Yen today. Pay attention to Aussie Yen today and pay attention what happened when 58 was broken. 95.58 was broken and it went to 35. Basically, that was the break of daily low, and that was the time when you could have made intraday position from a scalp swing position. If you don't have any further questions, then be sure to sign up for premium webinars, for our mine and Chris webinars, and of course follow my analysis on Admiral Markets blog and Forex Factory. I really encourage you to sign up for Forex Recap, because there are tons of free pips which I have been giving each Monday. And even this last recap was made on Tuesday. It went for 200 and more pips. Pool. Take 20 out of 200 and you will be happy again. So thank you guys for listening to me. Those are little tricks you can do. You can experiment, but it will be reflecting itself on your psychology. But try to practice that and you will get a better feel and understanding of the market. Thank you for joining me, and talk to you very, very soon. Cheers, everyone.